For our year ended April 2012, we showed a 30% increase in revenue and a 74.5% increase in net profit after tax. Significant growths. A large portion of it came from an infrastructural division, which has had a recovery. We redirected the business into energy efficiency, renewable energy, and concentrated more in Africa. And that division showed a 299% increase in profits and 158% increase in revenue, putting it in line from where we forecasted it to be when we purchased the business, which was approximately a third of the total revenue and profit of the business. The consumer side, even though it's slower than previous years, still showed a nice growth, and we look forward to growth going forward with energy saving. We did a project for Eskom, Project Power Save, where Ellies took 170 megawatts off the grid through energy efficient product using our core competencies, which is our installer base. And only 1/3 of that project found itself in our last year's figures. The next 2/3 are in our first 6 months of our new year. With regard working capital and debt, how we work the company is that we don't operate year end to year end. In other words, we see as our financial year end just a snapshot in time. So in other words, we don't stop our purchasing at the beginning of April and try and make things look all wonderful for the year end. What happened at April 2012 was we were 1/3 of our way into the Eskom project. Therefore, 125 million rands worth of debtors were sitting for the Eskom that got paid 2 weeks after our year end figure. Our stock had increased significantly to cater for that Project Power Save. And Megatron, having grown by 300%, required X amount of capital. There's about 60 million rand sitting in working capital, work in progress. And so when you're growing at that kind of level, you're obviously using a certain amount of your working capital. But if you put things into perspective, our debt to equity ratios, etc., are still well within acceptable levels. Because even though the rand value of debt has increased and rand value of debt has increased, as a percentage of your total turnover, it's still with very acceptable levels. We always look at our profitability and we look at our margins very carefully. You would have seen our margins have increased from 11% to 15% operating margins. A lot of that is due in the 2 years prior to consciously we went in and said, listen, we're going to reduce our margins to maintain market share and gain market share while times are hard for other companies. Let's fight the fight and make sure that we're positioned well for when the economy starts to recover. So that's one of the things we look at. We look at our debt and or the people that owe us the money, and our bad debt is less than 0.25%, so we manage our book very, very carefully, and it's one of the things we do look forward to. You know, it's all good and well increasing profits by 75%, but if you're going to do it recklessly and not look after your money and where your money is owed, then it's to no avail. You've got to look after the money and make sure it comes in. For our interims coming up, we close off end of October 2012. The company's still forging ahead quite nicely. A lot of the seeds that we planted in the previous period are now coming to fruition. We're still growing in the energy efficiency. We mentioned that we rolled out the shop within a shop into mass build stores. That's where we take a 24 square meter area ourselves, put only Ellies products on for renewable energy and energy saving. We've rolled out approximately 37 of them at the moment. There's 55 in total. So those are coming to the fore, and the revenue from those stores have been quite significant, which is fantastic. As I mentioned, we also had 2/3 of Eskom's Project Power Save in the first 6 months, and Megatron has continued with its growth and its recovery. So the order book is pretty steady and pretty full at Megatron, and so we'll continue our growth pattern going forward. We had a tremendous growth of 74%. Whether we keep up the 74% is a different story, but we will have better than average growth of other companies going forward. Dividend policy, we don't have a fixed policy at the moment. However, we did issue 10 cents dividend, which we paid on the 17th of September. We're always of the opinion, with the growth where it is at the moment, if the cash is available, we lean towards paying dividends and not paying dividends. And I think once we've on a more steadier growth path where it's not at 74% and we don't require X amount of cash, we'll set a firm dividend policy.